Overnight, markets and diplomats have been focused on the Middle East after the US and Iran declared the Strait of Hormuz open to commercial shipping for the duration of the current ceasefire window. Oil prices fell sharply on the news, with reports of Brent sliding about 10%, easing immediate inflation fears and giving risk assets a lift. But shipping firms are still seeking clarity on practical safety issues, including the risk of mines and any conditions Iran may attach to transit, so the market is treating this as de-escalation, not resolution. On the conflict itself, Israel and Lebanon have entered a 10-day ceasefire. Thousands of Lebanese civilians have begun returning south, even as warnings remain that the situation is fragile and obstacles to a durable peace are significant. Commentary and analysis across outlets stress that global attention is unlikely to be able to move on quickly. The ceasefire may pause one phase of fighting without settling the underlying drivers. In the global economy, the oil move is the key development. Cheaper energy, if sustained, would relieve pressure on households and central banks, and it is feeding optimism in U.S. markets, with reports that U.S. stocks are heading for their strongest month in 6 years on hopes the war is winding down. Separately, U.S.-Iran talks are being flagged as likely to resume as soon as this weekend, though the public messaging has been rapid and sometimes contradictory, keeping uncertainty elevated. On artificial intelligence and the broader technological revolution, there are no major, verified policy or platform announcements in today's material. The more immediate tech-adjacent theme is how quickly geopolitics is transmitting into markets and logistics, with shipping and energy acting as the real-time stress test. Turning to Australia, the dominant development is the federal budget backdrop and the debt trajectory. Reporting indicates the budget will confirm Australia's gross debt hitting $1 trillion this year, with interest costs on track to overtake hospital spending within 2 years. That framing is sharpening the political argument about fiscal sustainability, the cost of servicing debt in a higher rate world, and what gets prioritized in future budgets. In politics and government, new polling suggests Labour is facing its weakest result this term, with one survey putting the government's two-party position close to level when applying prior preference flows. On the opposition side, commentary on the coalition's post-election review argues the party's path back to government depends on learning from its defeat, while warning against a more Trump-style migration pitch that may not match conditions on the ground. For the Australian Public Service, the budget context is the immediate pressure point. Debt servicing and hard choices imply tighter scrutiny of program effectiveness, staffing, and delivery, even if specific APS measures are not detailed in today's articles. On the Australian share market, the key external driver this morning is the oil slump tied to Hormuz. If the move holds, it typically supports transport, consumer and rate-sensitive sectors, while weighing on energy producers, but local trading direction will hinge on whether traders believe the ceasefire and shipping assurances will last. Finally, locally, in Melbourne, an 18-year-old has been injured in a machete attack at a shopping centre dining area in Oakleigh, sending diners fleeing. It's a developing public safety story likely to prompt further police updates and community reassurance messaging.